And for more perspective on the U.S. COVID-19 response, how it might frame fiscal stimulus, is Douglas Holtz-Eakin. He's the former director of the U.S. Congressional Budget Office, joining us this morning from Washington. You heard that report, and obviously a lot of economists are trying to paint a picture of where things go from here. Our colleagues at Bloomberg describing this as uncharted waters. Douglas, what is the right approach in your opinion right now?
Well, there is an enormous amount of uncertainty, but inside of that, there's some things that we do know. Number one, there's an important public health mission that has probably not yet been fully funded in the United States. There's been $8 billion devoted to this. My expectation is that states are going to need a lot of assistance to cover the costs of ventilators, beds, lodging, and first responders. And so just paying for the test kits itself will be an important part of the response. That needs to get done quickly. That's a top priority. That can also help to instill confidence in people that would help the economic response. And there are targeted industries that are certainly going to need some help. The airline industry is number one on the list, certainly. We've seen this before, post the 9/11 attacks in the United States. Airlines were not going to have any customers, and we're in the same situation again. Giving customers checks is not going to get them on airplanes. So they're going to be a targeted list of industries that will need some support. And we're going to start to see some layoffs. The social safety net, unemployment insurance, food stamps will probably have to be strengthened a bit. All of those are knowable and probably ought to get done. The unknowable is just how quickly you can get in place a large fiscal stimulus and how big it needs to be. My own instincts are that we should avoid things like one-time sending of checks. This is probably going to be a fairly prolonged economic struggle, and we need some durable fiscal stimulus, something that will last through the second and third quarters for sure.
So can you walk us through that progress? Obviously, there's a lot of conversations taking place on what are the right things and maybe the less important things to be asking for at this point. But just that process of getting that bigger chunk of money, some of the challenges in getting to the finish line on that.
Well, I think, there are a number of challenges. First are just the simple logistical challenges of getting test kits into the hands of the right people, identifying hotspots, and as a result, getting funds to the places that need it the most.
Right.
That's proven to be a challenge so far. There are also bluntly political problems in the United States in getting Democrats, Republicans to the White House on the same page in what response there will be. So, knowing that there's a public health response, it'd be nice to add on to that some of the social safety net money in the eyes of the Democrats. And if they don't get agreement out of the White House, the process stalls. And there is fear about the functioning of the Congress itself. A lot of open concern about the virus in the halls of the Congress and whether they should stay around or they should disband. So there are a lot of challenges to getting this done. It's a very, very, very big challenge.
Interesting. And beyond the agreements within Congress, what about globally? You're joining us on a morning when likely in the next 15, 20 minutes, we're going to hear more from the Trudeau government on some of their plans, and at least by the end of the week, likely more on what industry assistance is going to be coming. The finance minister here has already alluded to that. We talk about central banks doing somewhat coordinated action. How much dialogue is there, just in your experience, between governments in different countries in a situation that seems to be having similar impacts in many countries?
I think there's good and bad news on that front. I mean, certainly the monetary authorities stay in touch, and you do see a coordinated global response to do what monetary policy can do to support markets, to support the economies underneath those markets. I don't think that's going to be a panacea in this case. There are some things monetary policy can't reach. Those targeted industries, for example, will not benefit from a broad monetary stimulus, but that's gone, I think, as well as one might expect in these circumstances. Hopefully there will also be some discussion of coordinated fiscal stimulus so that it's not just countries acting on their own, but there's some notion of getting help to the global economy as a whole. And where I think we have fallen down the most is on the surveillance issue and the basic detection and spread of the virus. We're behind the curve on that as a globe. I don't know that we'll catch up in this instance. It's a real lesson for the future.
The conversation around a recession, I mean, at the end of the day, I know there's a lot of complicating factors here, but should we be preparing to see the U.S. head into a recession, Douglas?
I think the odds are better than 50-50, no question. I wouldn't have said that even a month ago, and we haven't yet gotten the data on the material decline in household spending that is the integral part of a recession in the United States. When those data arrive, I think there's going to be a broad realization that it's coming, and I think that's what people should expect. I think it's unrealistic to frame this as if we get a big fiscal stimulus, we can avoid a recession. This is an enormous economic challenge. It will produce economic pain, and the question is, can it be minimized?
Just a final question going back to the markets, because obviously yesterday we pick a subject, or the markets pick a subject, and they often go with it. Yesterday they went with the idea, based on what we had heard out of the president late on Monday, that okay, this is time to buy stocks, and then we saw investors buy stocks yesterday, and now we're looking at these futures off quite dramatically once again on the idea that they didn't hear enough from the president. Do you have any sense on what exactly the markets might be looking for, the kind of things, the additional evidence out of Washington that might bring some market calm?
Well, I think that they've sequentially sort of tried to price the size of the shock, and that took a little while, and when it finally got priced in, it was quite dramatic. Now it's trying to price in the size of the response. What will be the response in the U.S.? What will be the response globally? And it's struggling to do that. In the absence of confidence on that, I think we're going to continue to see equity markets struggle a bit.
All right. Helpful context as always. Douglas, thanks very much for being with us. Douglas Holtz-Eakin,
thank you.
Former director of the U.S. Congressional Budget Office, was his take on what to be watching for out of Washington.